Well, good afternoon to everyone here today, and congratulations to Matt and David and Grant on putting together just a terrific conference. I hope you all have been enjoying the day. My name is Andrew Hohns. I'm the CEO of New Market Capital and Battery Finance, and my talk today is entitled America Wins with Bitcoin, a Bitcoin Policy Framework for the United States. As the well-known Bitcoiner Benjamin Franklin said, diligence is the mother of good luck. And so I think it's important to ground this presentation in Bitcoin's performance. Fundamentally, this is the engine that drives many of the ideas that I'm going to discuss over the course of the next 5 minutes, which is that financial markets, financial professionals, bankers, underwriters, individuals have not yet fully perceived how well Bitcoin has performed over the medium to long run. Yes, of course, in the short term, it's extremely volatile. Less than a week ago, it was less than $99,000. Now it's $108,000. And in the short run, you might get scared by that volatility. But if you could take a 4-year view on the Bitcoin, what you'll see is that over the course of the 3,045 4-year periods since the 2012 halving through March 31st of this year, the single worst performing period produced a positive annual growth rate of 7.3%. And the 10th percentile was already 33%, meaning that 2,700 or so of these 4-year periods experienced better. And in fact, the 50th percentile, 89%. When you compare it to gold and silver, you can see that many of the periods were actually negative on an annual basis. And even if you compare it to many other assets, Bitcoin has performed very, very well. At the Bitcoin for America discussion in March of this year, I proposed the BitBonds, and I thought that for this audience, I would replay a few of those slides. I came up with this in Wyoming, hence the view from Grand Teton, but you also get the benefit of some long-term perspective. $9.4 trillion of federal debt is maturing within the course of the next year, around $15 trillion over the next 3 years. Secretary Bessent has stated a clear objective to distribute future Treasury issuance across the curve, not funding it on a short-term basis, as Secretary Yellen did. Lower 10-year interest rates are poised to have a dramatic effect on many segments of the U.S. economy, including housing finance, auto lending, and so lowering those is very important. President Trump has established the Strategic Bitcoin Reserve, directing the federal government to acquire Bitcoin through revenue-neutral strategies. And in the proposal of BitBonds, by creatively integrating Bitcoin into U.S. Treasuries, we view that we can dramatically reduce the current interest rate and add a significant amount of Bitcoin to the U.S. balance sheet at the same time. In addition, the proposal is for a tax-exempt security, which creates a very good tool for families to save on a tax-exempt basis. The BitBond proposal is elegant. It's U.S. Treasuries plus Bitcoin upside. For every $100 issued, $90 goes to typical government purposes and $10 buys Bitcoin. The interest rate is significantly lower than the prevailing interest rate, 1% per year as opposed to 4.5%, which is presently roughly the 10-year Treasury. The investors still get a 4.5% total return because they get 100% of the Bitcoin performance up to a 4.5% return, and everything after that they split 50-50 with the federal government. When you look at the effect of this, it's extremely significant. For a $2 trillion proposed issuance, the government would save roughly $700 billion in interest over the course of 10 years. It could generate upside ranging from $830 billion to $304 trillion. Those are remarkably large numbers. That can significantly offset a large amount of the United States debt and defease it with the growth of the Bitcoin. Families will benefit enormously through a tax-advantaged savings product. In essence, it's a win-win-win. Benjamin Franklin, as I mentioned, a committed Bitcoiner, is renowned to have said, "A penny saved is a Satoshi earned." And you can see that even at the 25th percentile, over the course of 20 years, this BitBonds program is poised to defease approximately $51 trillion of federal debt, dramatically lower 10-year interest rates, substantially reduced interest expense, and revenue neutral to revenue positive growth of the strategic Bitcoin reserve. If you're interested in this proposal, there's a lot more information. I co-authored a white paper about it with Matthew Pines. It's gotten great feedback. The idea has generated a lot of excitement, a lot of coverage in the media, and I would be delighted to talk to you all more about it. But for the remainder of my talk today, I'd like to discuss extending the president's vision. Integrating Bitcoin throughout the federal government. This means every department and agency of the federal government has the opportunity to integrate Bitcoin to spark unprecedented innovation and efficiency gains. The President's executive order directs a whole-of-government embrace of Bitcoin. Imagine if within every department and agency of the federal government, a chief Bitcoin officer was appointed who was responsible for thinking about how that department, the National Park Service, the Department of Energy, the Department of Education, the Internal Revenue Service, how should that department integrate Bitcoin into its activities? At the beginning, we should focus on action and where we have first mover advantage. So key areas, in my opinion, include economic development, defense, and energy build-out. Lending programs are a very natural application to improve housing affordability, to lower the cost of capital for small businesses, farms, and student loans. That's what we're going to focus on throughout the course of the next few minutes. You may all remember this famous image from World War II with Rosie the Riveter messaging everybody about Bitcoin. What she was trying to get across was that it's an opportunity to power American opportunity with Bitcoin. How could we do that? Well, for a policy framework for lending, we can infuse federal lending programs with Bitcoin, designing credit instruments that align borrower and lender outcomes. Pilot with the United States Department of Agriculture for agriculture lending, the Small Business Authority for small business lending, and Fannie Mae for housing. This will benefit both America and Americans through lower interest rates for borrowers, flexible terms with no prepayment penalties, shared Bitcoin upside. That's what makes the lower interest rate and the longer amortizations possible. I'm going to give you a specific example in just a moment. It organically builds the strategic Bitcoin reserve at no cost to the U.S. taxpayer, and it strengthens both the United States economy and the household balance sheet of the United States. Bitcoin renovates. Let's talk about housing. Housing is becoming unaffordable, with high interest rates and aging housing stock in many areas, leaving homeowners trapped by their circumstances, unable to relocate and unable to repair. How could Bitcoin fix this? Imagine a $300,000 house with let's say, conventional 30-year fixed-rate mortgage at 7.5%. That's a $240,000 loan with a $60,000 down payment. At today's interest rates, the payment we calculated is approximately $1,678 a month. Now imagine this alternative, a $330,000 financing package, the same $300,000 house plus $30,000 of Bitcoin. The down payment, the same, $60,000, but a $270,000 loan. Instead of a 30-year amortization, how about 25? Instead of a 7.5% interest rate, how about 5.5? And as it would turn out, the monthly payment on that loan is $20 less, $1,658 a month compared to $1,678. So before we even get to the Bitcoin, we can say to the borrower, you can be in that home for $20 less per month. And because it has 5-year shorter amortization, at year 10, that's $38,000 of interest savings by year 10. Now the Bitcoin, every year that the borrower stays in the home, they vest into 2% of the upside of the Bitcoin. So if they stay in the loan for the entire 25 years, they get 50% of the Bitcoin upside, and the lender gets 50% of the Bitcoin upside. It's a collaborative structure where both parties benefit. At year 10, just to put some numbers around this for you, if Bitcoin grows at 60%, which is a little bit less than the rate at which it has been growing for the last 5 years, That results in $683,000 of excess equity for the borrower in just 10 years. At a 45% CAGR, it's $270,000. At even a 15% CAGR, it's $48,000 of excess equity. And they're poised to own the home 5 years earlier. Think about the financing that this could unlock for so many families to invest in their small businesses, to invest in repair and renovation for their homes. You can imagine I'm pressed on time, but I'll share with you a couple more slides. The same idea applies to farming. Imagine if the United States Department of Agriculture integrated Bitcoin into its lending programs for small farmers. And so many small farmers, their houses are also on their farm, and they're burdened by high CapEx expenses for new machinery, new equipment, and also variable revenue because the seasonality of growing changes year after year. But Bitcoin is not correlated to that. And if we put 10% Bitcoin or 15% Bitcoin in each agriculture loan, imagine what that could do to strengthen the roughly 200,000 small farms that exist in Texas, or the 75,000 small farms that exist in Oklahoma, or the many wild blueberry farmers across 46,000 acres in the state of Maine, where the growing season or the harvesting season is only a few short weeks. But if they had some Bitcoin on their balance sheet, think of the way that they could improve that. The same idea, of course, for small businesses. Main streets across the United States are suffering badly. I'm sure many of you live in places where you remember somewhat more stores and somewhat less vacancy than you see today. Imagine imbuing those businesses with some Bitcoin on their balance sheet so that they can make important and better investments in working capital and in inventory. The structure is the same as the housing program that we discussed. It's a flexible tool that can be implemented today by the United States government. In conclusion, America's enduring strength is a product of our perseverance, our determination, and our focus, combined with the courage to seize the moment. Think of the key moments in American history: the Declaration of Independence, Manifest Destiny, the Louisiana Purchase, Alaska, California, the New Frontier, putting a man on the moon, and now the Strategic Bitcoin Reserve is poised to power the next 250 years of American achievement. Life, liberty, of course, Bitcoin is freedom money, the pursuit of happiness. The United States government can partner with us, the US and us, American businesses, families, farmers benefiting from exposure to Bitcoin over the medium to long run, strengthening our balance sheets, strengthening our financial resources. It's a program that we can start immediately, thanks to the leadership of the Trump administration and this Congress, Senator Lummis, and other great leaders that we've had here on the stage today. I thank you very much for your time, and I look forward to working with many of you over the course of the coming months and years. Thank you.